How do you expect to do the same thing as everyone else and get further ahead than them? Why have your money in a retirement account, in a mutual fund, or an index fund, which have a basket of stocks in them that you have no control over and no real idea of how those companies are ran or protecting your investments? Not to mention, in most cases, you are paying unfavorable fees whether your investments go up or down. Self-directed IRAs are a great way to diversify your investment portfolio and take advantage of a wide range of investment opportunities. With a self-directed IRA, you have control over the investments you make and the assets you hold in your account, allowing you to tailor your investments to fit your individual goals and retirement needs. Some of the benefits of a self-directed IRA include tax benefits. Self-directed IRAs provide the same tax benefits as a traditional IRA, meaning you can enjoy tax-deferred growth on your investments and potentially receive a tax deduction on your contributions. For example, if you contribute $5,500 into your self-directed IRA, you will not have to pay taxes on those contributions until your funds are withdrawn from your account. Investment flexibility. With a self-directed IRA, you can invest in a wider range of assets, including stocks, bonds, real estate, mutual funds, precious metals, cryptocurrency, and more. Each self-directed IRA is different, so make sure whichever one you sign up for can fit your investment needs. Again, this just allows you to tailor your investment goals to fit your retirement needs. If you wanted to diversify your portfolio into real estate, you can do so with a self-directed IRA. Also, tying your hard-earned money to a real asset. Cost savings. Most self-directed IRA providers do charge fewer fees than a traditional IRA provider, allowing you to keep more of your money in your account, potentially giving you higher returns over time. For example, you may be able to save on annual maintenance fees or transaction fees when you use a self-directed IRA provider over a traditional IRA. The average fees for a self-directed IRA provider range from about $50 to $300 per year, depending on the type of account and the amount of assets held in said account. Control. Probably the best part of a self-directed IRA. With a self-directed IRA, you have full control over the investments you make and the assets in your account. This gives you the freedom to make decisions that are tailored for you or your family's financial needs. For example, if you wanted to invest in individual stocks or in real estate, you can do so with a self-directed IRA. Being a private lender, you could actually be someone's bank. Being a private lender for a real estate investor can be a great way to generate passive income using a self-directed IRA. As the lender, you would be able to determine the loan terms, deciding how much you lend out, how much interest you are charging for the loan, and the length of time you would like your money to be lent out. Unlike your investments in your traditional IRAs, where you are stuck with whatever you get. So tie your hard-earned money to something tangible, a real asset, which you are in position to take over pending the borrower defaults on payments. Let's run through a quick example. If you have $100,000 in a self-directed IRA, you can lend it to someone for a set amount of time. What's great is that it's between you and whoever you lend the money to on how long you want to lend it out. Say 1 year at 12% APR. The borrower pays you back in whichever way you set payments up. The point is you can be creative in whichever way you want to set up the terms of this loan. It could definitely be a win-win for both parties. The lender gets what they want and the borrower is getting the funding they need to complete a real estate deal. The best part is your funds are being tied to an asset, which is being lent out as long as it's stated in the loan terms. Not financial advice, but when I lend out funds, I make sure to tie them to an asset. In the case I speak of, we would tie this to real estate. If the borrower does default, you get the property, plus all the equity that was built in, and any of the payments that you accrued along the way. What's the catch? Let's go over the pros and cons, starting with the cons. 1. You should still understand this process inside and out. This is not your typical retirement account, where your funds are automatically invested and you just sit back and ride the market up and down with very little control. You do need to do a little upfront research and study this, hence the self-directed IRA. Your investment is only as safe as the contract. Let me say that again. Your investment is only as safe as the contract. So make sure everything you talk about is set in those loan terms. Do not take shortcuts. Use an attorney to draft these contracts. Pros: you are in control. That, I guess, is a con for some people, but I'm going to state that as a pro. 2, most borrowers pick up the transaction fees and attorney fees associated with the loan. So you may be paying $0 a year for your self-directed IRA if you can get the borrower to pick up that fee. Sometimes the borrower will ask you to wrap those fees into the loan as well. So say the borrower is asking for $10,000, maybe you give him or her a loan for $10,300 if you have a $300 annual fee for your self-directed IRA. Really, that's just more that you are earning interest on over the course of the loan. Now, there are also transaction fees for each individual transaction in or out of your self-directed IRA. Again, usually those are picked up by the borrower. 3, you are lending on assets which you know what to expect from. The rate, the return, the payment, asset, schedule, asset value. It's all stated in the contract. This all ties into doing your own research, not relying on the person borrowing the funds to do all of the research. I mean, you can, but I would tend to look into this a little yourself. It is a little extra work, but has proven time and time again to be very fruitful. Now, in closing up, this is just an overview to start getting your brain turning and seeing if a self-directed IRA is worth the time of learning to make a little more stable income through your retirement and have a better idea of what you're investing in. If you have any questions, and I really hope you do, just ask. If I don't have the answer, I will send you to someone that does. I work with IPlanGroup out of Westlake. They are a self-directed IRA custodian. I would love to put you in touch with them to hash out any concerns you may have going through this process. Happy investing. Put your future in your own hands.